Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Emmanuel Macron vows to serve out his term as French president, promising to choose a new prime minister within days. Meanwhile, National Rally leader Marine Le Pen tells Bloomberg a budget will pass if the government narrows the deficit more slowly. More turmoil in South Korea. President Yoon's planned trip to the National Assembly is delayed as he loses a key ally ahead of an impeachment vote for treason. Meanwhile, Chinese stocks rise on stimulus bets, while US and European futures are mixed as investors globally wait for the US jobs data.
In the meantime, a quick check on these markets. You can see some of the futures positioning there a little bit lower, down about 0.4% in the Eurostoxx 500 futures. It is a big day in the U.S. data. You do have payrolls today, so we do have one eye on that 10-year yield, 4.17, unchanged at the moment, 4.16 we'll call it. But it feels like before we even get there, we have to talk about what's happening in both China and Korea. Of course, the stimulus story, not to mention the new ambassador pick out of the United States, 7.26 on that currency pair. And then, of course, the Korean won. Weaker today, elevated volatility. We're going to dive into the details in just a moment. The countdown to the opening trade starts right now.
En tout cas, ce que j'ai dit, c'est que la démission du président de la République.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens.
Le mandat que vous m'avez démocratiquement confié.
The term you democratically entrusted me with is for 5 years, and I will serve my duty until the end.
Good morning, Friday morning. Your day looks a little bit like this. Politics, then payrolls. Let's start with the politics and figure out what is happening with France. Marine Le Pen speaking exclusively to Bloomberg. That's interesting, in as much as what she said was basically, I can wait for Emmanuel Macron to not be president. And it's fascinating, Kriti. I'm just sitting here wondering, what did Le Pen achieve, therefore?
I don't really know. Because it all depends on not just the 2027 elections and then, of course, the potential snap parliamentary elections in July of 2025. But it's the trial date that for her that really matters, March 31st. And if she's able, if that's a positive outcome, Anna, in terms of the kind of positive trial date, then she actually could be in the running for the presidential election. I just came back from Paris. The support she has on the ground is wild.
Yeah, the legal story is a real complexity, isn't it? And is it influencing how the key players are behaving right now ahead of all of that the legal decisions that we're not expected to get until the spring. Really fascinating to me the way the bond markets have responded to all of this. The calmness in the spread has been quite incredible, really. Is it because Macron says he's staying? Is it because Le Pen says she will pass a budget, just not Barnier's budget? I mean, we just have to, we'll see whether any budget is possible of passing. Or is it because actually the market's not quite so fixated on fiscal discipline as maybe we thought they were? Reading John Authors this morning got me wondering about the Stability and Growth Pact and the demands it puts on European nations at a time when we know that they need to spend more on defence, for example. Or
is it just a pause as we await the next acts in this story? It's from Le Pen's point of view, I think the legal story is really interesting. Yeah. If you thought that she could be president before that ban kicked in, then this would make sense, right? Yeah. I can become president, we're going to topple Macron, I'm going to become president, and therefore the legal case goes away. So she's kind of parked that by saying that she didn't want to do that. She doesn't necessarily want the withdrawal of Macron quickly. The budget story is interesting as well. She can't have the chaos go on for too long. Yeah. Because if she has the chaos going on for too long, it looks like she's caused it and she could potentially be blamed for it. So she needs the budget to be happening fairly quickly, a budget to be passed fairly quickly on the back of this. Yeah. The other piece of maybe analysis I'll add is that maybe spreads are closing because with this political chaos that we're going to get for 2 years and counting, as expected, is that if deficits is what created the spread widening, a austerity measure, a technocratic government basically, would close that deficit even more severely than Barnier expected. 4.8% is what Bloomberg Economics is expecting. That could just reverse some of the concerns. Whereas a budget that Le Pen would agree to would not do that. So we'll see. Yeah, we'll see whether we get that and whether that, in fact, ends up blowing out spreads a little more. But you've got some. I wanted to show everybody basically the front headline of yesterday's newspaper. We had the story basically of Macron, of Barnier, Marine Le Pen is what made the headlines. But the second story there
is South Korea. And I think that's where we go next, because that story also continues into today. We're, of course, going to go live on location. We're getting headlines, of course, this morning. Some really interesting live pictures that we're going to show you in just a moment. Bloomberg's Sherry An joins us from South Korea. Sherry, walk us through kind of what you're seeing, what's going on the ground.
Kriti, the political chaos continues here in Seoul. So this is the state of play right now. Opposition lawmakers blocking the entrance to the national parliament. There was speculation today that the president was heading to the National Assembly. We just heard from the South Korean presidential office saying that Yoon will not be visiting parliament. Lawmakers are still lining up with placards calling to impeach Yoon Suk-yeol. Now, what's happening right now is that there will be this impeachment vote. The opposition leaders calling for this to happen Saturday. They made the vote come quicker than what was expected at around 5 p.m. tomorrow. Will the ruling party head impeach the president? We started the morning thinking that he was going to oppose the impeachment. Then things changed when he released a statement saying that he was calling for Yoon Suk-yeol's power to be suspended, citing credible evidence that Yoon ordered the arrest of key politicians. This, of course, all related to that failed martial law decree. At this moment, the ruling party head, Han Dong-un, is giving a press conference, and he's explaining that he met with the president for less than an hour, but that there wasn't necessarily anything that could change the party line, and the party line being that they're going to oppose the impeachment of Yoon Suk-yeol. We're still up in the air about what will happen in the vote tomorrow. The fact remains that the opposition party needs 8 ruling lawmakers to vote in favor of this impeachment for the president to be removed. And then there's another long process that goes to the Constitutional Court. And then you need elections within 60 days.
All right, Sherry An, of course, joining us on the ground right outside where I believe is the National Parliament in South Korea. And just to describe what you're actually seeing there, this is the outside of the parliamentary building. When we looked at the shot earlier, you actually tried to see basically blocked lawmakers holding signs, showing some of this. We'll see if some of that chaos at the moment, or just that shot, looks like it's calmed down a little bit, but the chaos was certainly there just 30 short minutes ago.
So this is the atrium within the building. Previously, what you had was basically those two doors that you can see in the centre of the shot being blocked by lawmakers. And they've now departed. They were originally standing up. There was a lot of chaos and tussling. They then sat down. So we're in a position now where it looks like the president is not going to be going to the National Assembly, and we'll watch how things progress throughout the morning. But it does seem to be calming down a little bit. Yeah,
absolutely, and really symbolic, isn't it? Because if your view of this situation, these are the pictures from earlier. If your view of this situation is that what this story tells us is that democracy is strong in Korea, and there was an attempt at martial law and a coup, and it's failed because these people stood up to it. And so that's why all of this imagery of what's happening on the ground and what the opposition party is doing and what some of the ruling party are doing in standing up to these rules, these calls for martial law, that's why it matters so much. There we go. There's the images from a little while earlier of those lawmakers standing in the way of President Yoon.
There was also, I did read also some speculation on the way in this morning that there may be a second attempt at martial law. That seems to have faded a little bit, but that was certainly one of the headlines that was floating around overnight, that this was a possibility. Let's turn our attention to what is happening in China. Chinese equities have rallied a little bit today. We've now got to close on that, and we are watching very carefully what is going to be happening, because next week we've got the Central Economic Working Conference taking place, which is a grand title. Markets are hoping that we are going to see some sort of stimulus coming out of this. I went back July, September and November. We had big events, set-piece events from China, all of which the market speculated would deliver significant stimulus, all of which didn't. Right, indeed. I mean, that's the thing. We talked about this at the beginning of the week. When you're disappointed by one set-piece event in China, it's OK, because there's another one you can pin your expectations and your hopes to. Will they deliver this time around? I mean, on the one hand, we heard from one guest yesterday, Stephen Orth, I think it was, yesterday, telling us they need to stimulate demand from the Chinese consumer, because if you've got all these cars / other consumer goods that you were planning to export around the world, and now it's going to be harder for you to do that, you're going to need to sell them to the Chinese consumer. That also helps your relationship with the United States. So that's the argument to do it.
But on the other hand, if you're waiting for President Trump to come in and you're waiting to see which cards he plays, why would you play your cards first is another argument I can see being played.
Maybe we got an early indication of that in the last 24 hours. He's nominating David Perdue to be the U.S. ambassador to China amid a sea of hawks. David Perdue, perhaps not one. And I kind of dig a little bit into his resume, his CV, if you will. He used to be at Sara Lee Corporation, which is a major bakery breads company, basically, over in the United States. He did the supply chain for that, out of Hong Kong and Shanghai. So basically anything that has to do with, say, the farm food deals, agricultural buying, this is something where he can add value. He was the CEO of Reebok, for example, consumer goods, and that exposure to China there as well. And then he was the head of the Georgia Ports Authority. Savannah is a major spot for kind of incoming
So he's
shipping.
steeped in trade. He's steeped in global trade. And he's somebody who has actually cautioned against moving into a period of distrust. I feel like maybe we're in a period of distrust already, but that's interesting language to come from the future ambassador.
Feels like the takeaway is not a hawk. Because there seems to be lots of other hawks within the administration when it comes to China. What have we got coming up on the show? Let's walk you through the action. Vivek Paul, BlackRock Investment Institute Global Head of Portfolio Research, is going to be joining us. Kristen Sinding, the EQT CEO, joining us out of Zurich. Really interesting conversation there as well. Aliki, Rouffiac, Robeco, multi-asset portfolio manager, and Anne Applebaum, author, historian. How do you connect some of the dots, particularly in Europe at the moment? Globally, maybe you can fold Korea into this narrative as well. We're going to be talking about what is happening with the dictatorship story around the world and how maybe it is progressing or not progressing, and maybe there's some threads to pull there. What else are we watching? Jobs.
Yeah, it's payrolls day. It's payrolls Friday. And I feel like this morning there's just been so much news flow that it kind of got a little bit lost in the current there. The survey number about 220,000. The whisper number just shy of that 212. Remember last month we got only a 12,000 job increase. So that's one piece. We've got UMich sentiment and, of course, Fed speakers. But let's be real. Jobs are going to take the cake today.
They are. I mean, so last month was all about the hurricanes. Took a digit off those numbers, didn't it? I mean, it certainly didn't give us a clean picture of what's going on. Bloomberg Economics, though, saying that even beneath that, there was weakness in last month's report, and they expect some of that to come through this time around. But they also cautioned that actually the CPI print next week, we get that in the middle of next week.
Piece of data.
There's always another piece of data about the same time as that Chinese conference. That's going to be key. How elevated that November CPI print is will dictate, in their view, just how aggressively the Fed moves in December, if it moves.
Do you ignore the last month? Do you ignore November? Do you basically ignore last month's print and use October as the benchmark? And does that disappointing print condition traders to be more attuned to the downside, i.e., if you get an upside surprise, even a small one, the symmetry of the risk is that basically, therefore, you get a bigger reaction for a small upside surprise. I was reading, I
don't know if you were reading this as well. BMO does a survey of clients ahead of these payroll reports, and they were talking about different scenarios, the way bond markets might respond. Would you buy? Would you sell? And it was a very high percentage said that they would do nothing. And they put this down to the fact that it is, surprise, surprise, December, and there's not quite so many people paying attention. That seems to be what's going on right now.
I will say I did kind of admit the news flow to kind of slow down into the holidays. I feel like it's almost ramping up. I don't know. Maybe it'll be an exciting holiday season.
Usually is. All the times you think are going to be nice and relaxing these days prove to be exactly the opposite. Maybe because there is light liquidity. What else you need to know this Friday morning? New York police have released new photos showing the face of the alleged suspect in the fatal shooting of the United Healthcare CEO, Brian Thompson. Officers have offered $10,000 for tips to help identify and find the man. They've also searched a youth hostel where the suspect allegedly checked in using a fake ID. People familiar with the investigation said the words delay and depose were written on the shell casings and live rounds recovered from the scene of the shooting. In corporate news, Aviva has reached a preliminary agreement to acquire Direct Line as the UK motor insurer finally succumbs to a suitor after fending off takeover interest since early this year. Aviva's offer represents a total consideration valued at 275 pence per Direct Line share. And back to the politics, Donald Trump says he has chosen venture capitalist David Sachs of Kraft Ventures to serve as his AI and crypto czar. The newly created position underscores the US president-elect's intent to boost two rapidly developing industries. How much more good news does the crypto market need right now? It keeps coming, but you did see quite a significant dip yesterday. in Bitcoin. It's come back up again, but nevertheless, the market feels a little bit jittery.
Does he have to keep appointing crypto-friendly people
How much more
to keep it above 100,000? How many more of them are there, Kriti? I don't know. AI and crypto, they're not the same thing, though, are they?
They're not the same thing, but I think you can look to Elon Musk to kind of create it under the Musk umbrella, if you will. But it does bring a key point of not just the appointees, but are things like a crypto reserve, for example, the idea that's been floated, even a realistic prospect?
We've certainly heard Larry Summers suggesting that it's not necessary and would only benefit special interest groups. Let us tell you what is coming up on the programme. Then we are going to be talking about oil, of course, coming up. OPEC kicks the can down the road once again. We'll break down the latest decision from the Producers Alliance. Plus, we'll have more from our exclusive interview with the National Rally's Marine Le Pen. Up next, it's Jobs Day, but markets are digesting so much more. We'll dig deep into the details. We'll talk about France with our guests as well, of course. IB plus BBTV Go. That is the function on the Bloomberg terminal. If you want to get in touch with this team, a beautiful sunrise over London, preparing for bad weather this weekend ahead, though, I fear. This is Bloomberg.
There are probably respects in which crypto has been over-regulated by overzealous regulators. But some of what is being said, this idea that we should have some kind of national Bitcoin reserve, is crazy.
That's crazy. Is the price crazy? 97,918 right now. That's the price of Bitcoin. It has rallied very strongly since, obviously, we saw the election result coming through. That, of course, was former US Treasury Secretary Larry Summers speaking to Bloomberg about the Bitcoin story. Bitcoin's been on a tear. US stock markets have been on a tear. Outside of the United States, you've got all kinds of political problems. You look at what's happening in Korea, South Korea. You look at what's happening in France. You look at what's happening in China right now. Do you just keep investing in the United States? Vivek Paul, Global Head of Portfolio Research at BlackRock, joining us around the table this morning. Nice to see you.
Thanks for being here.
Is that the narrative? Keep going, keep going, keep going. For how long?
So we are overweight in the US, and we've doubled down on that in our 2025 outlook. If you kind of look at the dynamics facing the US markets, where the US is placed with regards to some of these structural mega forces that are shaping the economy now, it is in a better position to handle those in the near run. Right? The idea of this AI transformation that is changing the way in which markets operate. You have some of the most important companies in the world with regards to that space in the US. We expect this to broaden out. That's why we continue to,
Isn't that in the price already, though? I know all that.
Yeah. Well, so I think you're right that the prices have clearly kind of ramped up a long way, but I think using historical valuation measures and relying upon them alone, I think misses some of the bigger picture, right? We're in an environment where the nature of the US stock market itself has materially shifted over recent decades. Just take the Mag 7, for instance, where the idea that these companies were a small share of that broad stock market before, now they're a massive share of that stock market. You can't kind of compare apples to oranges. This is a different market now. It's more growthy. The valuation dynamic we should expect should be different on a go-forward basis. So I'm not saying that there's nothing to be taken from the valuation signals, but we need to also allow for the fact that the market itself is structurally transforming right now.
OK, so it's more growthy. I like that. There's a new one on me. And you say in your notes that this is not a business cycle.
Yeah.
Such are the structural forces at work here and the geopolitical forces that is not a business cycle. So sort of the structural outweighs all the cyclical right now?
So it's not to say that the cyclical doesn't matter at all, but there's a real risk of applying a purely cyclical lens to what's going on right now. And I think we can miss big opportunities and big drivers, right? 2024 shows us that. You go back to 2024, the idea of an inverted yield curve inevitably sort of foreshadowing a recession, the idea of the SARM rule, the unemployment data inevitably foreshadowing a recession. That didn't occur because structural forces were dominating. And I think what we need to be aware of here is that if we put purely a cyclical playbook, we might actually take the wrong investment decisions right now.
OK, and somewhere where we are seeing certainly not a cycle, but all kinds of structural forces at work is France. I got a note this morning from Barclays talking about the price action in France, suggesting a lot of bad news is already priced in. I mean, how do you respond to the sort of very calm nature of the market's response to really dramatic developments in Paris?
Yeah, I think if you think about the events of the last sort of 24 hours or so, in some ways there is no sort of new news there, right? I guess once we knew that there was likely to be this instability from earlier in the week, we've seen what was likely to occur. The bigger move in French spreads really happened towards the summer, and you sort of seen that. Obviously, they've continued to widen, but actually, if you look at the equity markets, this is kind of this idea of being in the price from the earlier question. It's been there for a while. We're seeing a valuation shortfall in Europe relative to the US, which is historically wide. But this goes to that point about sort of the structural dominating the cyclical. A cyclical interpretation could be that valuation gap is really wide, therefore it will inevitably kind of tighten, and therefore there's an opportunity there. That's not the story that we'd be telling right now. The structural dynamic is one that maybe the mean that we're reverting to is different from the one of the past. So there are opportunities in Europe, but I think they're much more selective than a broad story would suggest.
Do you need to factor in the China story more in Europe or more in the United States? Where does that show up?
Well, there are different dynamics here, right? So I guess, the direct sort of structural linkages between the economies, clearly that's been talked about between China and Europe for a while. The idea of, the sort of consumer dynamic, that is prevalent. But the China story with regards to the US is a broader one. It's one of tariffs. It's one of, localized tariffs relative to global tariffs. And I think that, in the grand scheme of things, could arguably end up becoming an even bigger story for global markets. That's something that's very uncertain right now, and I think there's no obvious and immediate answer to that question. We'll learn as time goes on.
But by that logic, you are kind of using the Trump 1.0 roadmap, right? That Trump tweets, there's a tariff story, there's a ripple effect in the markets. But every time he's made a comment on China, on Mexico, for example, as an early start of what these next 4 years might bring, the market has been relatively complacent versus the reaction you saw 4 years ago.
Yeah.
Is that the norm?
I think it's because I think we have a better understanding of what the Trump policies might look like. We've had the experience of Donald Trump being president before. And I think this idea of inflationary pressures being a little bit more elevated, the idea of maybe the rates path coming down but staying at slightly higher levels than was anticipated in the past, markets have adjusted to that story. I don't know if they've adjusted all the way. I think there could be more developments yet to come. We do see long-dated US yields still have room to go up from the levels that they are at today. So I don't think everything is in the price, but I think to the point you made earlier, there's a playbook to some degree that we have experienced in the past, which is why some of that is in the price now.
Is AI a disruptive technology?
AI, absolutely. So
okay.
AI,
So absolutely. Why, therefore, should we assume that the current incumbents, the Mag 7, the companies that are doing well right now, will not be disrupted themselves? Because they look like the most obvious targets for the disruption in so many ways. Why should we assume that these epic valuations, high multiples that we're watching at the moment, can be maintained if disruption is coming?
So I think there's, in the AI story, I think it's important to think about the different phases of the build-out, right? There's a phase 1 build-out, there's a phase 2 build-out, etc. And what I mean by that is, I think on that phase 1 story, where there's a lot to do with hardware, there's an idea of incumbents having a sort of a power that is hard for others to replicate in the short run, right? So there is a reason why some of those companies which have already built up a really big presence could continue to outperform from here. But importantly to your point, as we get into phase 2, as it becomes about
when
adoption.
When does phase 2 start?
Well, this is the big question, and I think this is part of the reason why, for us, we do see a broadening out in 2025 that is related to this story. I don't think that means that phase 1 finishes in 2025, right. But I think this is a period where we can see overlapping phases occur.
All right, Vivek Paul joining us around the table this morning, Global Head of Portfolio Research over at the BlackRock Investment Institute. He's talking about the Trump story. We are, of course, seeing a little bit of movement here in these markets. You're looking at a 10-year yield that's flat right now, but a little bit of a bump on the front end of the curve when it comes to yield, 4.16 over in the States. Here in Europe, 105.73 on euro dollar. It feels like a lot of perhaps momentum is going to be coming out of headlines around the payroll story later today. Perhaps a little bit of a softer approach this morning, Guy, when it comes to the markets.
Absolutely, we're going to watch. Today is politics, then payrolls. Yeah. That seems to be basically what we're watching out for. We're going to try and factor all of this into our next conversation. What's the outlook for private equity, and does the political instability that we're seeing undermine it? Kristen Sinding, CEO of EQT. Next, this is Bloomberg.
Welcome back to the programme. It's Friday, 30 minutes to go until the start of the opening trade. This is the opening trade. Let's have a look at what the futures have in store for us. And not a great deal of movement expected this morning. Euro Stoxx 50 futures down 0.3%. US futures look decidedly undisturbed, unperturbed by any geopolitical news lines or otherwise this morning. We had some support for Chinese stocks through the Asia session, but that not filtering through particularly into expectations for Europe or indeed into the US. We have jobs data later on today, and that's going to be a key feature. Let's have a quick look at the bond markets. We've been watching the spread. We've been watching the yields in France actually ticking down a little bit and the spread coming down a little bit over the past week or so, which seems almost incongruous given the news flow, but maybe the markets have priced it all in. Seems to be a lot of what we were hearing from guests, but that's what we have on the markets right now here in Europe. So a little bit of buying just at the margins on European debt this morning. Now, in an exclusive interview, far-right leader Marine Le Pen told Bloomberg a budget can be passed in a matter of weeks if the next Prime Minister is willing to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think it's credible, but I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them. Mr. Barnier made that promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent, structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with those two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
Well, it's a matter of weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxation, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state, and that's inadmissible. Well, in any case, what I said, that the president's resignation is a personal decision on his behalf, and can only take place, in my view, when a political crisis takes place or an institutional crisis can find no other solution than the resignation of the President of the Republic. It is not the case for the moment. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with three blocs which, in reality, can't implement a policy.
The French National Rally leader Marine Le Pen speaking exclusively there to Francine Lacroix in Paris. So not pushing for Macron to resign, clearly looking ahead, though, to new legislative elections, new parliamentary elections. They can't come yet. They can't come until the summer, but that seems to be on her radar.
It does. And on the Macron side of this, I think it's interesting because he, with his whoever he chooses next, is going to be trying to create what's been called a pact of non-aggression, basically, and saying we need to peel off factions of the leftist coalition so that whenever we do put a caretaker government in, you have a better shot of it against Marine Le Pen. And that key piece is a socialist faction, but they're kind of hitching their wagon, for lack of a better term, to the far left. And that's the piece that he talked about in Parliament, that Gabriel Attal is pushing for. We'll see how successful that is, though.
Still don't understand exactly what she achieved with this.
Yeah.
And that's what I'm trying to work through in my mind. Her voters clearly wanted her to do this. There was clear support that she should bring down the government. She's done that. But now what? And what was the objective, ultimately, other than appeasing those voters? Don't know. If the period of chaos lasts a long time, there's huge risks for her in this. Right. Because she will be seen as being, rather than the socialists, potentially responsible for it. And ultimately, how does that play out in the elections, which are now likely to take place at some point next year? You've got to assume July.
Yeah, to what extent do the public attach blame for these developments to her, to Barnier, to Macron, to others? All of that very much still a live conversation. We'll continue to monitor all these developments in France, the political turmoil, of course. And it is with that political turmoil in France in mind that we go to our next conversation. This instability being added in Europe, businesses are having to make decisions about how to deploy their capital. A really interesting example of this, we're joined now by Christian Sinding, CEO of private equity firm EQT, making a big investment right now, not connected to France, but we put it in this political context because it's interesting to see business as usual being done. Christian, very good to see you. Thank you very much for coming to speak to us. So you've made this decision, this investment, Unis, an energy business, a battery energy storage system developer in Germany. I wonder how much political headlines distract you from the business of going about investing in Europe or not?
It's a great question, and it's obviously a very interesting time in the world right now, and particularly in Europe. Now, when we look at investing, we're a global firm. We invest in Europe, we invest in Asia, we invest in the United States. We try to find long-term secular themes in society. Behind those themes, we find investable sectors, and then within those, companies. So if you break it down from some of the macro challenges, political challenges, geopolitical challenges that we're seeing right now, we're still finding some really interesting opportunities, and Unis was one of those, which is an energy battery storage business in Germany that is not dependent on, it's not dependent on subsidies. It's not politically sensitive. It's just a trend in society that needs to be supported with capital and competence.
OK, yes, you say it's not politically sensitive, but you do watch this politics and wonder where it goes next and how it plays out, Christian. I mean, clearly Europe is taking measures to tackle climate change. We do see some areas of rising nationalism, and that gets tied up with some pushback against that. And clearly in the United States, the tone being set by the US from January onwards could look very different in terms of transition. Does that not impact your enthusiasm, the timing of you setting up this transition infrastructure strategy?
Well, again, this is not a political type of decision that we do. We invest in these long-term trends, and at some point in time, fossil fuels will disappear in the world. That means that the world needs to decarbonize. The energy system is decarbonizing. The transportation system is decarbonizing. Look at Tesla, for example. The manufacturing system has to decarbonize. And as part of that decarbonization trend, which is going to take 20, 30, 40, 50 years, and probably need $200-300 trillion to drive that change, we want to be investing in that long-term trend. And the nice thing about private equity is that we can be long-term. We own companies for 5 to 10 years. And during that time, we try to accelerate and drive their change and transformation. So another way to say it is that we're not investing in kind of Europe's macro or the United States macro or the Asia's macro. We break it down and try to find companies where we can make an impact and drive transformation, and then ultimately deliver great returns to our investors.
Well, Christian, it's Kriti in London. Let's take a little bit of a step back here on this infrastructure theme, because it's not just an energy story. Some of the juiciest deals in private markets at the moment are in European infrastructure. You're seeing that with some of your peers as well. But how much of that extends to investment around things like data centers, things like electricity grids, as Europe, driven by the Draghi report, driven by these fiscal governments you're talking about, is trying to ramp up? Does that create a valuation glut or a valuation premium? How are you thinking about that?
Well, that's a great question, actually. I think that the valuation situation right now is complicated, and that gives us an opportunity to find companies that we can develop faster or better and provide capital to. So I'm not sure you could say that anything is undervalued or overvalued. It's very difficult to know at a single point in time. But if you look at the data center space, for example, that's the other mega trend in the world, of course, the digitalization of the world. We own a very large data center company called EdgeConneX. It's growing in all the regions in the world. It needs billions of dollars every year to continue to expand. And to find those platforms and accelerate them is really the opportunity. And when there's political turmoil or capital markets turmoil, sellers of those assets are a little bit more keen to sell. So it gives us more opportunities to invest, actually. So we, in a strange way, we kind of like it when the markets are a little bit complicated, because that gives us an opportunity to think long term and find those assets that we can build.
Spoken like a true market maker. You made a key point, which is that ultimately you're positioning for the long term, 5 to 10 years down the road. But Christian, some of the sellers of those assets you just outlined are European governments. I'm looking at Maloney's government, for example, looking to offload some of their international stakes. You're seeing it in Germany. I'm sure you'll see it in France shortly, certainly in Spain. How are you thinking about kind of approaching some of those governments at a time when they're making big promises on infrastructure investment, but if you look at their budgets, they don't really have the money to deliver on it. Is that where private markets can step in, and with what speed?
This connects actually to the Draghi report, where Europe needs to improve our competitiveness at multiple levels, from capital markets to deregulation, to the digitalization of our societies, et cetera. What we'd like to do now is to engage more with governments, actually, both at the EU level, at the country level, and of course also in the US and Asia, to help drive capital, private capital, into this transition of society, whether it's on the energy transition side or on the digitalization side or wherever it may be. And I think we need to get better cooperation between the private markets or the business world and the political world. And I think that cooperation hasn't been that good for the last 5 or 10 years. So hopefully there's an opportunity, also, with that Draghi report in mind and what's happening in the U.S. in mind, to drive capital, to drive change. It's really needed for society. And that's what's interesting about infrastructure, is we're investing in companies and assets that are providing essential services to society. So that does have a real public service element to it as well, while at the same time, it's a quite interesting place to invest and drive returns. So we should be able to make that cooperation better. That's at least our hope.
Christian, good morning. Is it easier to buy assets than sell assets at the moment? Yeah, excellent thought. It is easier to buy, I would say, because we still have a little bit of the cycle left where there were huge investments made in private markets as interest rates were very, very low, during and after the pandemic, almost a bubble happening, across the world in the financial markets. And some of those investments take time to get to their required returns in the private markets. And when there's political uncertainty and geopolitical uncertainty as well, families, corporates, et cetera, are maybe a little bit more careful. But we're seeing a shift. We're seeing a lot of activity this year. EQT's invested over 24 billion euros in equity in deals all across the world. That's a record. Our previous record was 21 billion. We've done more than 10 billion of exits. So the cycle is turning, and we're starting to look into 2025 to a more balanced market between buyers and sellers, and hopefully a very active time. Okay, so at that point you start to see maybe the velocity within the space starting to pick up. Is that what we should be anticipating? And do the deals that get done now, how different are they to the deals that got done previously, just in terms of the spaces that you're looking at? If you look at the past vintages versus the current vintages, are you looking in different places in terms of where you're looking to deploy money, where you were looking to deploy money previously? How big a shift, which sectors should we be looking at to kind of be left behind, and which ones are going to see the greatest focus on going forward? Yeah, I think the private markets have learned again that investing in cyclical assets or very, trend exposed or commodity exposed assets is very complicated. We don't do that. We're investing in these themes which are longer term. So we're a big investor in healthcare, one of the biggest investors in healthcare in the world, actually, in private markets. Big investor in technology, software, digitalization of the world, the energy transition, et cetera. And I think the markets are moving in that direction, the private markets are. And you can kind of see it in the deal flow. If you look at the deal flow this year, a lot of the transactions have happened in super high quality tech companies, super high quality infrastructure companies, excellent healthcare companies. We took Galderma public this year on the Zurich Stock Exchange, for example. So it's those sectors that are robust and that are not so politically exposed and not so cyclical that are there. And I think that's where we play the biggest role. At least that's what EQT does. We, of course, as an industry, invest in many different types of companies, but the hot ones now are those that I mentioned, and I think that's going to continue into next year, but then it'll open up into other sectors.
Christian, it's Kriti again. You mentioned key to kind of hot button issues, which is high tech and high infrastructure, right? Those both kind of found a marriage in the likes of Northvolt, which has, of course, filed for bankruptcy in the United States. It feels like a little bit of a scare factor for a lot of your private equity peers. What are you and some of the folks you're talking to learning from the Northvolt story, given it had so much momentum to begin with as basically investing in the future? What did you learn?
Well, this is one of those industries that's super exposed globally, right? And we're not investing we never invested in Northvolt for many of our funds, even if we're based in Sweden. The reason for that is that there's so much global competition in the battery space. If you look at Korea, you look at China, and the volume and the competence that they have to compete in this industry, and this is really a capex competition, and I don't think it's going to be that easy for European companies to compete against the Asian companies in this space. So, you have to kind of bring it back and try to find out wherever our companies are based, whether they're based in Asia, Europe, or the US, where are they competing? Are you competing locally in infrastructure? Are you competing globally? If you're competing globally, do you have all the skills and all the competitive advantages that you need to win? And I think that this has proven now, unfortunately, that Northvolt did not have that.
All right, Christian Sinding, the CEO of EQT, joining us this morning. We thank you so much for your time out of Zurich. Coming up on the program, UK insurer Aviva reaches a preliminary deal to buy Direct Line. We're going to get that in your stocks to watch next. This is Bloomberg.
Payroll day in America. Should we care? Joining us now, Markets Live executive editor Mark Cudmore. Mark, do you care?
Day traders should definitely care. From a macro point of view, no. I'm not really paying too much attention. This is not going to change the views for where the Fed is pricing into next year. I think we have too much policy uncertainty. And next year could still be a very binary situation. We've just got such a massive scope of outcomes. There are potentially a lot of inflation boosting policies coming through, but we have to see whether they actually get delivered, and we have to see what the full spectrum of policies that come through from the Trump administration. However, for short-term traders over the next couple of weeks, we've got a rate cut from the Fed that's about 70% priced in for less than 2 weeks away. And today's decision will either confirm that is happening or put more doubt around it. So therefore, it will affect rates at the front end. That means it'll affect the dollar. That means it'll affect stocks for a short term. So we'll kind of trade it today, this afternoon. We'll trade it into Monday. It's the kind of short-term trading that I always used to lose money on. So these are the kind of days that at 1:30 p.m. when it comes out in London, I'd go to the pub at 1 p.m. so I wouldn't lose more money and then assess it over the weekend instead. A much better situation.
Well, Mark, that actually might be valuable to our audience. With that context in mind, tell us what you would do.
Well, as I said, if I was able to, I would go to the pub. Fortunately, because I know that non-farm payroll is Friday like this, where it's about the short-term rather than the macro, it's some of the most dangerous trading because you might have the short-term conclusion. For example, we get a strong print and everyone goes, oh my God, there's going to be doubt in the Fed cut. They won't cut in December. Maybe we get high wage inflation. And so everyone goes, no, they're going to ease off. And you get that initial reaction. But then because of pricing, it can reverse very quickly. That's why I find these short-term Friday reactions are a different type of trading to the macro trading environment. So yes, today, to Guy's initial question, today really matters for some sector of the market, but for the macro audience, no, not really. They're still kind of processing France, which was kind of seen a pivot point this week. They're wondering what the next developments are in Korea. They're wondering whether Bitcoin has another leg. But I think many people are managing books into year end at this stage.
Yes, really interesting. So thinking we are close to the year end then. Really interesting the way that the politics has, and to a large extent, not moved risk appetite over the past week, Mark. Whether you look at Korea, you look at France. I'm looking at the MSCI Global Index, and we're much higher than we were at the start of the month, which, given all of the political headlines, you might have thought might not be the case. But we seem to be able to put this aside.
Well, Korean stocks are even cheaper. They have had a long discount they had a discount for a long while, but they're even cheaper. So Korean assets have an extra premium. I think it's going to stay for a while. I think French assets have underperformed all year. We know that actually the CAC 40 has done very well recently, but that's because it had massively underperformed. I think it's going to do okay in the short term. As we were saying in yesterday's show, I think that the outlook for France is not very positive, but this is not the time to pay the bearish scenario. I think next year there'll be a chance to refocus on French stress again.
OK, thanks very much, Mark. Bloomberg Markets Live executive editor Mark Cudmore, of course. MLIV Go is the function to use on the terminal to get the team's analysis. Let's get the stocks that could be on the move. Joe Easton's here. Joe.
Morning, Anna. So Aviva has agreed to take over Direct Line, the insurance rival, for 275 pence a share. Now, the original bid was down at 250. We saw the stock rally on that news last week, and then yesterday there were reports that it would come back up, and we've got that approved in terms of an agreement today. In terms of Aviva shares, could potentially be a little bit weaker given the concerns around the capital implications for that company. Then in terms of home builders, a couple of pieces of news there. Firstly, we've got Barclay Group reporting pretty strong sales in the latest period, saying they've seen an uptick in some of their recent orders in the sector. Now, these shares slammed recently as UK rates rose following the budget here in the UK. Barclay nursing a loss of around 20%, as is the rest of the sector, and a lot of those stocks trading below book value at the moment. Then in terms of Puig over in the cosmetic space, the company has recalled one of its makeup sprays made by the Charlotte Tilbury brand, and analysts over at Citi saying that this will reduce the company's earnings for the year ahead, and they expect the stock to fall today on worries about this. Now, this was one of the biggest IPOs that we've had in Europe this year, and it's down around 20% since that Madrid listing. Keep an eye on that one today. Then finally, in ratings, we've got an upgrade from Moncler at Goldman in luxury. BMW is upgraded at Jefferies today, and Ørsted downgraded in utilities at Morgan Stanley. One to watch in Copenhagen later.
Joe, thank you for that. Our equities reporter, Joe Easton. Some individual stock names to watch. We are expecting a little bit of weakness at the start of trade today. US futures look flat to negative. Of course, we've got the jobs report. Will that set expectations for December? Will we find ourselves waiting for the inflation print next week? All of that still to come later in the trading day. The market open is next. This is Bloomberg.
Friday morning, good morning. Yes, it's Friday. Let's talk about the Thursday session, though. To start with, yesterday we saw European equities rallying into the close. We then get a fade in the US session. Maybe that's why futures are ticking a little bit lower this morning here in Europe. We're only down by a little bit. We're watching, of course, what is happening with the politics. The politics is going to maybe be the story this morning, but, of course, payrolls will be the story this afternoon. Kriti, what are you seeing? A little bit of red, maybe?
A little bit of red. If you're looking for that Friday feeling, look elsewhere. You're not seeing it in the futures picture. Your stocks 50 futures are down about 0.2%. The FTSE 100 on its heels. CAC 50 futures, 40, they are unchanged at the moment. They were marginally positive just a moment ago, Anna. If it does indeed somehow turn into the green and end close in positive territory, I'm told it will be the longest winning streak in 3 years for the CAC 40. We'll see if we get there, Anna.
Yeah, absolutely. That will be incredible, juxtaposed against the politics. Let's have a look at some of the individual stocks we're focused on. Direct Line could be will be in focus, as Aviva has reached a preliminary agreement to acquire this business. 275 pence a share is the price on the table right now. Values the company at £3.6 billion, and the stock closed at 236, so we should expect to see a bit of a pop higher there. Citi says that Puig shares are likely to fall today after the company said it's voluntarily withdrawing selected batches of its Charlotte Tilbury airbrush flawless setting spray due to quality issues. So we'll certainly keep an eye on that one. Is that something that would be big enough to move the stock? We will see. Let us focus in on the housing sector in the UK as well, because Berkeley's saying that there is traction in the UK planning system amid reforms. That links to the politics of yesterday, of course, and they say they're on track to deliver their profit guidance for 25 and 26, Guy.
Halifax house data this morning a little higher. Skincare matters. Two things you need to know. Let's talk about this market open. Let's figure out what is happening here. Let's watch the numbers and come through and see what we're getting. FTSE 100 really struggling to gain a little bit of traction this morning. I think we've got a bit to wait for as we work our way through the day. We've got to watch what happens with that payroll number. IBEX is down a little bit. So, again, not a great deal of movement up front for the European session. The 600 is up by less than 1/10 of 1%. To Kriti's point, we'll see what happens with the CAC Iran today. Does the relief kind of story that maybe we're seeing in markets in France continue today? We'll watch that one very carefully. You've seen disappointing German data as well. Keep an eye on the industrial story. What is happening there may signal a recession potentially for Germany. The CAC is open. It's up a little bit. We wait for the DAX. We wait for the SMI. What's going on below the surface? Let's find out what that story looks like, Kriti.
Well, Guy, you are seeing green on the screen when it comes to the French story, at least in terms of index contributors. Your biggest index contributor to the upside this morning is actually Airbus, followed by several other French stocks. I'm looking at L'Oreal, I'm looking at LVMH, among several others. They're your top 3 index contributors, Anna, this morning. The rest of the market broadly lower.
Yes, and I'm intrigued by this Puig story. I was just looking at this, and consumer products and services broadly is going higher. Yeah. But Puig brands actually an area of weakness, down by 3.9%. This on the back of, and Citi calling this right, that this would weigh on the stock today after they voluntarily withdrew these selected batches of this setting spray. I didn't realise setting spray is such a big deal, but, you know, clearly the Citi analysts know more than I do about face products.
Your hair's clearly not as frizzy as mine and Guy's, obviously. I think Guy's the prime audience for this, right, Guy?
Skincare matters. Alex Steele always told me that. You've got to take this stuff seriously.
Can I start with just saying hairspray and skincare are 2 different things?
Yeah, but this is an airbrush flawless setting spray, so I'm assuming this goes on your face.
Oh, fair enough, fair enough.
There you go.
Today's point.
We're learning new things here this morning. Back to the markets. Yeah, I think it's fascinating that we are seeing French... So the more international businesses, you think about Airbus. So Airbus is a company that manufactures largely in euros and sells in dollars. Aeroplanes are priced in dollars. This is a global business. Are we starting to see maybe the market looking at what the French situation tells us about the long-term trajectory of some of these businesses, and maybe it doesn't? And I think that's the narrative. We spoke earlier this week about babies and bathwater. Are we seeing maybe some of the babies being put back in the bathwater, and some of the winners globally, Airbus, I look at what it's doing at the moment, huge order backlog, Boeing in trouble. Maybe that's a business that actually has a non-French related narrative to it, and maybe that's why you're seeing maybe some of the interest coming back into those kinds of stocks. I can only speculate on that, but it feels logical.
It does feel logical. I will say, though, if we're looking for signs of stress, and this is a conversation we've had all week as we continue to look at the French stock market with the political overhang, as Anna had mentioned, continue to rally, there are signs of stress. You have to just look under the surface. So, for example, in today's trade, you are still looking at the banks, the French banks, becoming the underperformers. So perhaps that's the sector story that matters from here on out, to your point. Let's get another perspective here. Aliki Rouffiac, multi-asset portfolio manager over at Robeco, joins us around the table. Aliki, pleasure to have you on the program. Good morning. Walk us through, perhaps, your thoughts on the French story. We've seen so much underperformance in the CAC 40, and we've seen so much underperformance when it comes to that bond market. Is this the moment to kind of bottom feed or pick your winners, as Guy kind of mentioned? How do you think about it?
So, to a certain extent, what we've already seen in the French market has been already priced in. The French stock market is trading at a discount relative to the European market. But also, if we take a little bit of a more long-term perspective, because at the moment there is a lot of political uncertainty in Europe, not only in France, but the situation in Germany as well, with the strikes and elections coming up next year, is a cause for concern. So for now, I think a more cautious approach is warranted. However, looking a little bit further in 2025, there is significant upside potential for this market, and the reason being valuation. Valuation is pretty attractive, especially relative to the US. At the moment, Europe is trading at a significant discount of more than 40% relative to US equities, but we really need to see some catalysts playing out over the next year for this value to be unlocked.
Well, I think this is kind of a journalist's dream to say, and I think I'm going to jinx it as I say it, but I think the first 60 days of 2025, we're going to kind of know the 2 big headlines in this part of the world. It'll be, of course, the German federal election. I'll throw France in there in terms of European kind of political chaos. And then it's going to be what happens in Donald Trump's first days in office. I'm curious which of those things matters more for the European market in terms of trading, maybe first quarter 2025.
I think we're going to see a lot of volatility, which could potentially create buying opportunities during the first quarter. On the one front, what's are going to be the announcements in terms of the US, particularly on the tariffs front. This, to a certain extent, has been already priced in. So politically, if we see a result that would lead to stabilization in terms of the landscape in Germany, that would be a very strong catalyst for European assets to perform.
That's interesting. So maybe our focus should be maybe on Germany rather than all on France right now. Let me ask you about the dollar, though, because you talked about the Trump trades and what they mean. I know that you or the team that you work with has been talking about how the dollar does look overvalued and at risk. Do you see a catalyst for changing that, though?
The catalyst would be when asset markets are going to price in the relevant factors that are going to affect the global geopolitical landscape over the first quarter of the year. And what I mean by that is we've already expecting tax cuts in the US, but also tariffs. Deregulation is a big factor that is going to play out, and also immigration curbs. So once all these factors are priced in, and also once we have visibility in terms of the degree and timing of implementation, I think then we would see some moves on the dollar, particularly if it's more positive for other asset markets. We expect the dollar to weaken.
And is there anything then that picks the euro up? I mean, is that a catalyst for the euro as well?
That's quite an interesting question, because at the moment the only conviction that we have within our tactical asset allocation outlook is getting exposure to the yen. That is a little bit a kind of outsider in terms of how the currency is reacting. We've seen recently, yesterday, it strengthened at the back of announcement of a rise in Japan wages. And there we also see in Japan a policy that is more towards hiking rates, and this would support potentially a stronger yen. However, having said that, we do look at the yen relative more to euro and the Swiss franc, where we find that there the funding costs are better at this point in time to capitalize on this opportunity.
What's going to outperform the S&P next year?
That's, I think, from a one-year perspective, and as we've already written on our one-year Robeco outlook, there are two areas where there is a lot of potential to unlock value. One is Europe, and the other one is emerging markets. And if I look at emerging markets as it stands now...
Yep. Do you think Europe's going to outperform the S&P next year? Is that possible? I can look at the numbers this year. The DAX has done relatively well, up 21%, and this is currency adjusted. This is not currency adjusted. The S&P's up 27%. If I currency adjust that, that's 32 and 21. Does that do I get a mean reversion in any of these stories? US outperformance this year, underperformance elsewhere. Do we see that gap closing?
I think, as I said previously, we need to see some catalysts for this value to be unlocked. And Europe, for example, if we see a reversal in terms of underspending trend that has been going on in Europe, and this is going to be a very significant catalyst. So what we're looking there is improvement in consumer sentiment, but also improvement in consumer spending, which is currently lagging the real wage growth. So the picture there is more constructive, but we need to see the catalyst happening. The other point to mention in Europe is currently the saving rates is at post-COVID high. So we have 20% saving ratio. So if we start to see saving rates going down, this would also be a beneficiary to consumer spending. And I think what the market doesn't expect, events like, for example, a truce between Ukraine and Russia, could be another catalyst that would lead to Europe outperformance.
So, Aliki, to Guy's point, Europe has outperformed the United States in very small, short periods of cyclicality, right? When you start to see the cyclical part of the expansionary cycle, that's when Europe outperforms. But I'm curious what you need to get there. What signs do you need from Europe to get there? You mentioned the consumer savings rate. Is it something that could show up in the data? Do you need hiring? What, to you, signals the start of a expansionary cycle in Europe?
I think what would make consumers spend more is a more stable environment. So we talked about politics. Politics at the moment induce a lot of uncertainty. And on the other side, we are seeing a lot of weakness on the manufacturing sector. So if those two themes... we see improvement going into 2025. I think then sentiment is likely to improve and would support consumer spending.
Aliki, great to see you. Thank you very much indeed for joining us this Friday morning. Very nice. Aliki Rouffiac, Robeco, multi-asset portfolio manager. Let's take a look at what the Core 6 looks like this morning. This is the picture we find ourselves with in Europe. Lots of red to the right of the screen. Ferrari, ASML, Schneider, Nestle, all seeing losses. But it was interesting, as Kriti was pointing out, you are seeing some of the big French names this morning, maybe outperforming a little bit. Schneider's an exception, but LVMH is up. Airbus is having a really solid session. Are we starting to maybe become a little bit more selective in the stocks that we're watching in France? Let's check some of the other individual names, figure out what is happening there. Joe, over to you.
So we are seeing a big drop in Puig, the owner of Charlotte Tilbury, over in Madrid. Now, remember, the company has said that they are withdrawing one of their makeup sprays due to a quality issue. They say there is no health concern, but that is the biggest decliner on the entire stocks Europe 600 today, and also the biggest drop for the shares in 3 months. Now, this stock IPO'd at 24.50 back in May. We're down to 18.35. It's already down about 25% since that IPO. One of the biggest IPOs in Europe this year, and really hit hard by that Charlotte Tilbury withdrawal for Puig over in Madrid today. Then, in terms of the insurers, we've got some upside as expected in Direct Line. Now, the latest bid at 275, so we're still around 20 pence or so below where it is priced in terms of that agreed deal. Potentially a bit of execution risk on that one, but the stock coming up almost 8%. Aviva holding pretty steady in terms of the acquiring company holding firm at the moment. Then in terms of Barclay Group, now the sales looked OK, but we're still coming back down. We also had the Halifax data that Guy mentioned as well. That looked pretty solid, around a 1% gain in the latest month, but still not seeing too much of a boost on that. Potentially more to read into that statement on there. Then in terms of the athletic leisure stocks, Lululemon was up 9% in the US yesterday, citing strength in mostly its international business. The US looked a little bit weak in terms of some of their sales. We're seeing a little bit of a gain in Puma today, up almost 1%, but the rest of them pretty steady at the moment. Then in terms of rating changes, the big one in luxury was Goldman saying they like Moncler. This has actually been one of the better performers in the sector, and Goldman thinks there's still value in this stock. There was a speculation around Burberry. That kind of seems to have faded away in terms of reports on a potential deal there. And finally, BMW, a second buy this week after UBS upgraded it. Now, Jefferies switches preference. They go from BMW to BMW from Mercedes, preferring BMW due to its cash flow outlook. And that one is up 0.9% in Germany this morning.
OK, Joe, thank you. Joe Easton with the movers. And the CAC 40 is outperforming a little bit, but nothing's moving all that much this morning, is it? I mean, we've got the CAC up 0.2%, the FTSE 100 entirely flat, US futures, you really can't see much movement there. We do see, whether it proves to be a big event or not, payrolls is on the horizon, and that could matter for December, as Mark was telling us earlier.
Can you tell it's Friday?
Yeah, so what I guess the question you have to ask then if you are looking at this as a short-term story, what gets squeezed around this, I guess, is the question that we should probably ask ourselves.
Around payrolls.
Yeah, what are we out of position on in terms of a strong number? What pushes us higher? If you look at the Whisper number, you're potentially going higher.
And it doesn't seem as if the market is betting on loads and loads of rate cuts, and that's really underpinning the market narrative at the moment. So even if we got a terrible number and it changed expectations, or even, if we got a really good one and it changed expectations about the number of cuts we get, it doesn't feel like that is top of mind for investors as we go into 2025. Yes, it's there in the backstory, but what President-elect Trump does next seems to be a bigger question.
Yeah, and I think your point about the numbers is crucial here in that if you look at the months prior to the 12,000, it's like 135, 156. So is 220, does the math work here that 220 is the estimate? Do you just divide that in two to account for both months? Like, is that how you think about it? I don't know.
Going back to Mark's point, you whatever you want, you will generally see. So what does the market want from this number? Because that will be the narrative that ultimately comes out of it. Is the initial narrative the right one? Normally not. So you've got to figure that one out as well.
That's why you go to the pub, he said.
That's why you go to the pub.
To consider
which is generally a good piece of advice anyway. And then you think about what the positioning setup is. The dollar's quite strong right now. Is that where you therefore potentially get the euro moving around quite a lot on the back of this number?
He is geographically well positioned for this strategy, isn't he, being in Singapore? Coming up on the programme, we'll get back to some of the global politics. South Korea's president cancels a visit to Parliament after opposition lawmakers, they planned to block him from the building. We saw them lining up to do that a little bit earlier on. We'll be live in Seoul with the latest. This is Bloomberg.
Welcome back. Watching the opening trade. We are 18 minutes into the European equity market session. Generally, most markets this morning are going nowhere in a hurry. The exception appears to be actually the CAC 40, where we're actually seeing some action this morning. You've got that market up by 0.3%. What is also interesting is that volume is significantly higher in the CAC 40 than it is in most other markets, which are actually a little soft today as we await the payroll number coming a little bit later on. So a little bit of activity this Friday as maybe the situation begins to stabilise in France. Political instability is certainly a theme in France at the moment. It's also a theme in South Korea, where the country's president, Yoon Suk-yeol, has cancelled a visit to Parliament, where he faces impeachment proceedings for a failed attempt to impose martial law. There are reports that opposition lawmakers are planning to block Yoon from entering the building. We saw evidence of that a little bit earlier on. Bloomberg Sherry-Ann joins us now from the National Assembly. Sherry, walk us through the latest. What does it look like now?
Perhaps a good idea not to come to the National Assembly, given what you can see happening behind me. Safety concerns are rampant right now. We have dozens of protesters out in force. You have crowds just extending behind me, demanding the resignation of President Yoon Suk-yeol. I have a demonstrator right now with me who's in fact a part of a small opposition party. Let me ask her why she's out today. 오늘 어떤 목표로 나오셨어요?
네, 국민에게 총을 들이댄 윤석열이 체포하기 위해서 나왔습니다.
We want to arrest President Yoon Suk-yeol, who's actually put a gun to the citizens' heads here in South Korea. 언제까지 계실 거예요? Until when will you be here?
윤석열 탄핵될 때까지 멈추지 않고 여기 있을 겁니다.
She will not stop. She will continue to come here every day until he is impeached. 탄핵이 안 된다면, if he's not impeached?
그럴 일은 없습니다. 반드시 탄핵될 거고 윤석열 체포될 때까지 우리 국민들은 싸울 겁니다. 국민이 반드시 이깁니다.
That will not happen. He will be impeached and the citizens will win this battle, especially when it comes to arresting him as well. Thank you so much for being with us. These demonstrations can grow really fast, you guys, because remember the last president that was impeached was back in 2016, facing a crowd of thousands that grew into more than 2 million in just a matter of months. We do have that impeachment vote slated for tomorrow. Whether the ruling party will oppose that impeachment bill is a big question. The ruling party leader has already said that he wants the president to be suspended.
Sherry, a fascinating conversation there. Walk us through the ripple effects here. We know that Yoon's government, Yoon's administration has been one that's been crucial to the defense story in Southeast Asia. Walk us through the ripple effects of this potentially new administration that may come in and what that means for South Korea's relationship with the rest of the world.
The ripple effects will be huge because right now we have a conservative Yoon Suk-yeol administration who's had a friendlier relationship with Japan and really worked through that trilateral cooperation with the Biden administration in order to push back against not only the likes of China but also North Korea. If we do get a new administration, especially coming from the opposition leader Lee Jae-myung, who I spoke to yesterday, he was saying that he was going to do everything that he could. It was just a matter of time that President Yoon Suk-yeol gets impeached. He sounded more dovish when it comes to relations with North Korea, that if not provoked, that things would remain the same. When it comes to Japan, he talked about how meetings just for the sake of meetings are not good. So we will have to wait and see what happens. But right now, the crucial test is what happens on Saturday on that impeachment vote. The opposition parties only need 8 ruling lawmakers to change their vote and actually pass the impeachment bill. If the impeachment bill is passed, it goes to the Constitutional Court. Then if the Constitutional Court upheld that impeachment motion, then an election needs to be triggered within 60 days.
And Sherry, what is the role of the defense ministry, the military at this point? We saw headlines earlier saying that the defense ministry has suspended duties of some officials, and there seem to be questions now about whether some military officials are able to leave the country.
Yes, we have heard reports of the Defense Ministry now suspending duties of some commanders involved in the operations after the martial law was declared. We have seen a new defense minister being appointed by President Yoon Suk-yeol already. That would be South Korea's ambassador to Saudi Arabia. This, of course, as there are allegations now of treason against the defense minister, safety minister, and President Yoon Suk-yeol now facing these allegations that will be investigated thoroughly. Right now, authorities are trying to move. We are still trying to figure out what the next steps will be in terms of who runs the country. But what remains clear is that if President Yoon Suk-yeol's duties are suspended or if he gets impeached, then a caretaker administration would take over, and that would be led by Prime Minister Han Duck-soo. He is a veteran. He has served in that role of prime minister before under a president that was also impeached. President Yoon Suk-yeol is the third South Korean president to be impeached.
Sherry, thank you very much for joining us. Bloomberg's Sherry Ann in Seoul with the latest there. From Seoul, let's go to the Middle East. The oil beat needs our attention as well. Oil has steadied after OPEC Plus decided to push back the revival of shuttered production by another 3 months. The decision failed to lift sentiment in a market that's expected to suffer from a glut next year. Let's bring in Bloomberg's Jumana Basecha in Dubai. This was widely anticipated. OPEC Plus was expected to make this decision then, Jumana. What takeaways from it?
Yeah, well, as you say, there wasn't that much of an impact on the market because there was an expectation in the market that OPEC Plus would once again delay the decision to start putting back oil barrels to the market, which doesn't seem ready to digest extra barrels. So the impression from the market here is that they have just decided once again to kick the can down the road. And what we found out yesterday is instead of actually bringing back that 2.2 million barrels per day to the market over 12 months from April of next year, they're going to do it over 18 months as well, so a lot more gradual putback. And really, this is a reflection of very weak market fundamentals here coming from some of the downside to demand that exists. Several think tanks, including the IA and even the OPEC group themselves, have downgraded their estimates for demand growth over 2025 several times this year. And what that means is there still is a supply imbalance. According to our own numbers, Bloomberg Economics estimate that that supply glut amounts to about 1 million barrels per day. So if you take into consideration some of the weakness of demand that's coming through from China, plus the potential for further non-OPEC supply to hit the market, what you are seeing here is very clearly OPEC's hands are tied. And many people are saying that even once we get to closer to the next decision, which is, again, in Q1 of next year, they may once again decide to delay, given some of the headwinds that the oil market is facing here.
Jumana, thank you very much indeed. Bloomberg Horizons anchor Jumana Basecha updating us on what is happening with the oil market, which is interesting, considering what we're about to get from the Trump administration as well, and America, potentially even more oil coming onto the market at a time when the market really doesn't need it. OPEC between a rock and a hard place.
Yeah, absolutely. So, well, you know that Trump is a big fan of the oil industry, and drill, baby, drill has been that mantra, hasn't it? And so the extent to which that adds to the glut concerns next year is something we watch closely.
At the same time that the economic sentiment may be slowing as well. We're talking about the U.S. consumer resilience. What happens if we start to see evidence of that fade?
We're going to pull some of the politics threads in just a moment and figure out what is happening. Tests on democracy, it certainly seems to be a narrative at the moment. Pulitzer Prize winning historian Anne Applebaum joining the dots for us next. This is Bloomberg.
This is the opening trade. We're about 30 minutes into today's session, seeing some very marginal moves everywhere except for the French markets. That's where you're seeing some notable outperformance. The CAC 40 higher by 0.4%, even in the face of some of the political tensions we've seen, of course, across the week. It seems like France going into potentially a technocratic government. The market's not really batting an eye. CAC 40 higher by 0.4%, again, in the face of that political overhang.
Yeah, we saw a lot of stocks getting thrown out, babies being thrown out with bathwater earlier on this week, and maybe we're trying to kind of figure out what we do next. Names like Airbus, L'Oreal doing better as maybe the market reassesses some of the risks around some of those names. It has, though, been to Kriti's point, a week of geopolitical shocks. We've been watching what's been happening in France, but you've seen this lightning advance by Syrian opposition fighters. You've got martial law potentially being declared or not declared in South Korea. You've got anti-government protests in Georgia. This coming Sunday, you've got elections in Romania. Keep an eye on that story. You definitely want to keep an eye on that story because potentially this threatens another country pivoting towards Russia. Is there a link? Can I make a connection? Is this a pre-Trump era in which this chaos is beginning to manifest itself? Or are these just unrelated events? I think a lot of people are trying to figure that question out as we go into this weekend. Let's try and get some answers for you. Anne Applebaum, author of Autocracy, Inc., The Dictators That Want to Run the World, joins us now from Poland. Anne, good morning. There's a lot going on.
Good morning.
Are these unrelated events? Are these related events? Is there a theme that I can draw between the geopolitical tensions that I'm seeing in so many parts of the world right now?
I think there's some of them are related, and there are themes that you can see. One of them is the theme of Russian influence and Russian attempt to persuade parts of the former Soviet empire, parts of the Soviet bloc, to realign with them against the United States, against Europe, against the democratic world. And so their efforts in Georgia, the Georgian ruling party is closely aligned with Russia, has just declared that it will end Georgia's plan to join the European Union. The massive protests you've seen on the street are disappointed Georgians who wanted their country to go in a different direction. You see something similar happening in Romania, where a candidate whose popularity surged after enormous amounts of money were secretly invested on his behalf on TikTok, which is, of course, a Chinese-owned app. The money is thought to come from Russia, helped to boost his campaign. He's also somebody who would take Romania in a different direction, maybe away from NATO, maybe away from supporting the Ukrainian effort to repel the Russian invasion. So you can see in quite a lot of countries the Russian attempt to package its influence and to spread its influence continues. I mean, in Syria, of course, you have something the opposite. You see an armed group with backing from outsiders also pushing back against the Russian-Iranian-backed regime there. So, in a way, that's the forces of what I've called in my book Autocracy, Inc., the countries who are seeking to help one another maintain dictatorships. You see them, under attack.
History sometimes provides a useful template to understand current situations, and I'm wondering if there's a period in history that stands out as maybe an indication of kind of what we're going through and therefore what we may go through in the future. A lot of people I'm talking to at the moment are drawing parallels with the 1930s or with the 1970s. And the question that maybe comes out of that is, are we going to end up seeing a sort of Neville Chamberlain situation where we end up appeasing a dictator, or are we going to end up seeing a kind of Ronald Reagan where we end up pushing back a dictator? What do you think happens next?
So, first of all, I mean, be careful with historical analogies. Nothing is precise. But it is true that we see a group of countries with very different ideologies actually beginning to work together in the way that perhaps the Axis worked together in the 1930s. It's a little bit different from the 1970s. But yes, the challenges facing the democratic world are the same. I think we've heard pretty clearly from Donald Trump that he doesn't see himself as a leader of the democratic world. He's not going to pull the democracies together in order to fight back against kleptocracy or to push back against, Russian disinformation on the internet. I mean, those are tasks that will have to be taken over by Europeans or by the Asian democracies or others who want to protect their integrity and protect their sovereignty. Trump is also at this stage still a kind of, there's a question mark about what he'll do. He hasn't given us yet a plan what he'll do about Ukraine. We don't really know what his attitude towards China will be. So I think there are a lot of, there's still a lot of open questions. But the main point being that he doesn't see himself as somebody who's the leader of a large group of allies. And I think other countries would do well to listen to that. He's been saying it throughout the campaign. He said it during his previous presidency. it's important that people listen to that and take on board the lessons from that.
And it's Kriti in London. Let's talk about one of those allies in particular that's dealing with a bit of political chaos, and that, of course, is South Korea. We know that South Korea and the United States had a little bit of a tenuous relationship in Trump 1.0. Now, with this new chaos and the concerns around the defense associated with that part of the world, specifically against North Korea, and, of course, what that means for the war in Ukraine, how are you thinking about it? What does the ripple effect of the Yoon administration in South Korea mean for a Trump 2.0?
Actually, what was really impressive about South Korea and what has been noticed in a lot of countries, including this one, I'm in Poland today, is the speed with which the South Korean political system reacted to the declaration of martial law, the way in which the opposition parties, but also the public, consolidated to push back against it because they cared about democracy and wanted to save it. And that has, that will have an effect on others. I mean, people have noticed that, there remains a country that cares enough to keep Democrats in power. I mean, how it will affect, Trump's attitude to South Korea, which he's been in the past skeptical of the U.S.'s role as South Korea's protector. He's talked about the high cost of U.S. troops there. Is hard for me to say. Probably it won't. Again, I would repeat what I said a few seconds ago. I mean, he doesn't see himself as the leader of a big international democratic alliance. He thinks allies are burdens. And so whatever kind of government South Korea has, I think understanding that, not being misled, not living in some kind of fantasy. It's important to listen to what Trump is saying and be prepared for perhaps a different kind of different kind of relationship with America. That's more important than the question of who is the president right now.
In terms of South Korea's role of that trilateral cooperation in the South China Sea, does this have a ripple effect there in terms of kind of that growth story or that kind of fighting Chinese aggression in the sea? What does that look like?
I mean, actually, the South Korean stand in favor of democracy, I think, is a great example for that part of the world and for the broader ideological argument against China, if that's the right way to put it. I hope the Japanese were watching. I hope that others in the region, the Philippines and so on, were watching as the South Koreans defended their system, because there is going to be a lot of pressure on democracies. I mean, there is already. The degree to which they can pull together and stick together based on shared values will help them a lot. I mean, of course, there are strategic reasons why Japan and South Korea and others should be allied, but having something shared as well, having a sense of values, a sense of the importance of liberal democracy to share, I think potentially could strengthen that alliance.
And take us to Romania, if you could. And we're looking at the prospect of a NATO skeptic, somebody who's spoken very favourably of President Putin potentially becoming the president of that country. We'll wait for the final round of the elections. And you've been through some of the allegations about how he was supported in the first round by Russia via TikTok. What does that mean for Europe? What does that mean for NATO if this member of both is run by somebody of that ilk, given what we've already seen in Hungary?
So first of all, let's give the Romanian people a chance to vote in their election and not jump ahead and assume that we know who the winner will be. Yes, obviously, it's of huge concern if Romania were to drop out of the alliance to help Ukraine. Romania's just geographically, it has a border with Ukraine. It's very important for Ukraine's defense of itself in the Black Sea. Romania has been one of the routes that the Ukrainians have used to ship grain and other goods, outside of the country during the war. And maintaining Romania as a solid part of the alliance is very important. Remember also that Romania is a country that has a president and separately a prime minister. It looks like right now the prime minister will remain somebody who is in favor of Romania's role in the European Union and in NATO. So it might be a little bit more complicated than just Romania disappearing from the club or becoming Hungary. I mean, the president will not have full control over the country or over its politics. clearly the amount of interest and money and attention that Russia has paid to this campaign, the investment in this candidate shows how much Russia cares about the unity of Europe and the unity of NATO, and how much, obviously it's easier for Russia to win this war by picking off political allies of Ukraine rather than winning on the battlefield. So,
And thinking about Ukraine, and I wanted to go there next. I mean, you talked earlier on about how under a Trump presidency, it would be up to Europe to push back against Putin if that's what Europe wants to do. Are you anticipating that Europe will have an independent foreign policy stance when it comes to Russia, separate from what we hear from the White House?
I mean, I don't think anybody wants it to be separate. And as I said, we just don't know yet what Trump's policy is. And I wouldn't, again, prejudge that either. It's pretty clear that inside Europe, there is now there's almost a NATO within NATO, the Scandinavian countries, the Baltic states, Poland, maybe the UK. There's a group of countries who do understand both the security risks and the internal risks that a Putin victory would pose to their countries and to the stability of their countries, remembering that Russia has been involved in sabotage all across Europe in recent days. There have been underwater cables that have been cut. There have been buildings that have exploded. There have been assassinations all over Europe in recent days and weeks and months. And there is now a group of countries who understand why that's important and willing to work together. And I think you'll hear more from them, and you'll see pretty clear efforts from that kind of inner NATO, which may eventually include Germany after its election, might eventually include France and others as well. But you'll certainly see them pulling together to make sure that there isn't a collapse or a catastrophe in Ukraine, which, by the way, I should say, it seems as if Trump doesn't want either. The one thing we know about him that he's been saying in phone calls with foreign leaders is that he doesn't want there to be a collapse. What that means in terms of what a negotiating strategy would look like, of course, we don't really know.
Anne, thank you very much. Thanks for joining us. Anne Applebaum, author of Autocracy, Inc., The Dictators Who Want to Run the World. Thank you very much for joining us to discuss, many geographies and where we're seeing those tensions. I should tell you on a programming note, at 10 a.m. UK time, we'll have a conversation with the German Finance Minister, Jörg Kukies. And later, 10:40 a.m. UK time, we will speak exclusively with the Bank of England MPC member, Swati Dhingra. So a host of different topics under the microscope from German politics, German economics, to what happens at the Bank of England.
And then I believe next we go to France as well. Still ahead on this program, more from Bloomberg's exclusive interview with Marine Le Pen, including if she has any plans to meet with U.S. President-elect Donald Trump on his visit to Paris. We're going to get to that next. This is Bloomberg.
Welcome back. You're watching the opening trade, 47 minutes into the equity market session. This is what the narrative looks like. Generally, nothing happening except in France, where actually you're seeing some outperformance this morning, as maybe some of the names that got thrown out earlier on this week on the political tensions start to recover a little bit. Maybe names like L'Oreal and Airbus tracking a little bit higher. In terms of what comes up throughout the rest of the day, there is but one event. So we're moving from the politics of the payrolls. Yes, we've got University of Michigan data, which I think is quite interesting. And it'll be fascinating to see what happens there. You've got a few Fed speakers, but it is payrolls day today. And I've got the charts up in front of me of the whisper number, which has been creeping higher over the last few days. So the survey number is 220. The whisper number is now up to 217. Is the market set up for an upside outperformance or a downside outperformance? And just in terms of the way that we're going to manage that, if you do see an upside number, does the market kind of react more than a downside number? And I suspect it may be a little bit of the latter. I wonder whether you get a euro squeeze with a downside print today.
Well, I think the point that's been made on this program time and time again is that it comes down to Fed expectations, right? But it's the
for December.
For December, sure, but it's the in terms of like the 10-year yield, for example, and the 2-year, which you're already, by the way, seeing bumps early ahead of in the session, 416 on that 2-year. But then I think it also comes down to the margin of the beat, right? Because if it's 220,000 is a survey number, that's a massive number. So if you were to get something substantially bigger than that, or even meet expectations, that is still significantly higher.
Do I just instantly discount it then go, yeah, we're just recovering from last month? Is this a real number?
Well, yeah, well, I wonder how much people really are fixated on the estimate this time around, given that last month was such a different story. It was all hurricane related. I mean, what was it, 12,000, Kriti? It was something, you know, that it wasn't normal in any sense. And so there's going to be, will there be just no noise in this number? I find it hard to believe that you kind of turn your back so quickly. I mean, the US labour market moves fast, but does it turn its back so quickly in all that chaos of the last month?
We've also had the conversation that maybe it's not the payrolls number that matters anymore. Maybe it is still the inflation numbers that matter more, which is a real turnaround from what we've seen in the last couple of months, right?
Yeah, Bloomberg Economics saying that'll be the number to watch. That's next week, the middle of next week.
Always feels like next week, doesn't it?
Just when you're watching that Chinese briefing about growth, you'll also have to focus on the inflation number out of the United States.
Can I not just get ready for Christmas? Shouldn't that be maybe
what
we're all doing?
And that's what traders are doing, according to a BMO survey of clients. Everyone's just getting ready for the festivities. 65% said they're going to do nothing, no matter what happens with the payrolls.
I am putting the tree up this weekend, rest assured.
You are literally 6 days late.
We have gone prematurely to our plans for the weekend. Let us focus in on the hard news agenda, though, of this week, and there's been plenty of it coming through to us, much of it across the channel. Far-right leader Marine Le Pen has told Bloomberg in an exclusive interview that France can overcome government collapse and deliver a budget in a matter of weeks. But that's if the next Prime Minister is prepared to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think it's credible, but I'm not the only one. I don't think it's credible either to the President of the Cour des Comptes. Once again, these are simply promises, and they know very well they can't keep to them. Mr. Barnier made this promise, and in reality, his budget worsened the deficit by 12 billion. So, if we don't make significant, intelligent structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with these two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
C'est l'affaire de quelques semaines.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxes, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state. That's inadmissible.
Meanwhile, French President Emmanuel Macron says he will serve out the remainder of his presidential term as he seeks to put an end to the political turmoil in the country.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new prime minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agreed not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
Let's bring in Bloomberg's anchor of the Pulse, Francine Lacroix. And Francine, good morning. You've been in Paris recently. You conducted that interview with Marine Le Pen. You have to wonder, she's giving very calming messages to markets, isn't she? She's saying, yeah, there is a budget I could approve. It just wasn't that one. It wasn't the one Michel Barnier had. It'll be one that doesn't do the fiscal hard work as quickly as he'd planned. Now I guess we just wait and see. Is there really a budget that they can coalesce around?
Yeah, so this is the million-dollar question. So I came back actually on the same Eurostar with Kriti yesterday, and breaking news, the Eurostar was not late. So that's one thing that we can put on the positive side. I mean, the negative side is that there's going to be a lot of volatility over the next couple of months. And you're right, Anna. Look, Marine Le Pen has been at pains over the last 4, 5, 6 years after a pretty disastrous debate 6 years ago, where she was seen as, pushing out some crazy ideas on Europe, some crazy ideas on the markets, as much more mainstream. So she wants to say, she'll fight with you if you say she's far right. She says, no, I'm center right. I am, someone who's reliable, which is also why she's not asked Emmanuel Macron to resign. So all of her conversation when it comes to budget budget and deficit, was trying to reassure the markets, whilst at the same time saying, look, we don't want tax hikes, especially not for companies, because that's her base. She wants the companies to be on her side. Let's see who's a prime minister and actually what that prime minister comes with in terms of budget. It's unclear to me whether there will be a lot of chaos in the next couple of months or whether she can keep it calm.
Yeah. Well, Fran, as we were taking that Eurostar together, you saw me kind of cram all the newspapers from yesterday, and I was shocked that on all the front pages, it wasn't Macron, it wasn't Barnier, it was Le Pen. And I think it builds on Anna's question, what is she actually saying is the solution? I haven't heard any policy ideas from her that could be kind of the antidote to some of the things that she's kind of shutting down.
Yes, again, I mean, Marine Le Pen in France really represents something. Her father was seen as one of probably the most racist right-wing politicians, and she, throughout the last 15 to 20 years, has tried to change that image, again, to be more calming or a more calming source. So the fact that she now holds the cards, not only to, help with the next prime minister, but that she has 11 million people, let's remember, that voted for her party back in July, means that she's front page news because she could possibly be closer to the presidency. Now, two caveats for that is that Emmanuel Macron stays in power until 2027, unless he resigns, and he made it very clear yesterday that he would not resign. And then she has a bit of judicial trouble, and so we'll know around the 31st of March whether she can actually run for president next time or not.
Why does she not want to bring Macron down? That's the bit I don't understand.
Because she wants to be seen actually as respecting the institutions, and I think that goes back to like her family. She brought the government because she says it wasn't a good budget, but the institutions. So she has to, I think, tread a very careful line in not being blamed for chaos. Now we're not seeing chaos in the markets, and because of her past and because of her father's past, she wants to say, well, the Constitution doesn't say the president should resign, so I'm not asking him to resign.
So she needs this, she needs a budget quickly, because if there's no budget for a long time, then chaos may ensue and she may end up taking the blame.
Again, so I think that's a good question. It was unclear what her intentions were. I think she says she doesn't want chaos, and she certainly doesn't want chaos that she will be blamed for.
Yes.
Whether she wants, Emmanuel Macron to stay on, no. Whether, chaos would help her, it probably would, as long as she's not blamed for it. So it's kind of like a treading line. This is like politics at its finest.
Sticking with Paris, Guy.
Notre Dame this weekend.
On to the weekend. Yes. It is reopening.
Did you go to look?
And guess who shows up?
Yes.
The main show, as always.
You would have thought the building, the reopening, would be the main show, but it's going to be Donald Trump, isn't it?
Yeah, so first of all, we have had a look inside. It's beautiful. And this was going to be the big centerpiece for Emmanuel Macron. Like, look at, what we've done 5 years after that fire that really shocked France. Donald Trump is showing up for his first overseas travel since he became president.
And Marine Le Pen might bump into him.
Yeah, so I was surprised. We tried to, we thought she had better ties with him or stronger ties, but it kind of reminded me, Macron did something quite special with Trump last time around.
Yes.
He wowed him.
It was very showy, wasn't it?
I think there was a romantic dinner with Melania Trump at the bottom of the Eiffel Tower that Trump and family liked.
Donald Trump quite like the military processions around the Arc de Triomphe as well. I'm putting the Christmas tree up this weekend. You've also got the final Eras Tour concert.
What is the global economy going to do next? Is my question around the Eras Tour.
Without Swifties.
That is definitely crucial.
Yeah, crucial. We should get a programming note on Tuesday. The opening trade will be live from Bloomberg's inaugural Woman, Money and Power event. We're convening the most influential female voices in finance. Discuss the biggest themes facing the future of business. Do not miss that. We'll, of course, be on location. This is Bloomberg.